Welcome back to the channel, friends. I've got a question for you. Who in their right mind would give up a 3% mortgage rate to buy a house at today's rates? It's like trading in a Ferrari for a minivan, on purpose. Stick around, we're doing a deep dive. Probably heard this referred to as golden handcuffs or rate prison. It's a homeowner's dilemma. It's stunting inventory and making people feel trapped. And it's 100% the most valid reason for not wanting to move. I get it. There are actually legit reasons to move on. Or maybe not even move on, but move up. At the end of the day, putting your life on hold because you have a low interest rate doesn't feel right for everyone. Let's run through some scenarios why it might not be worth feeling this way. Reason number one, your house is now a shoebox. So your current home was fine when it was just you, maybe you and a dog. But now, you got a spouse, maybe a kid or two, and somehow 3 more dogs. When you bought your first home, you thought, this is perfect. But now, you're trying to host holidays, visiting family, or friends want to crash, and there's just nowhere to fit it all inside of your house. At some point, you've got to accept that no interest rate is worth living in a real-life game of Tetris. The right house now might matter more than the right rate. Is this a good reason? Maybe, but it still needs to make sense. You still have to have the income to support the move, and it's a very personal decision. I get it. It's more expensive then. So let's move on and we'll get back to this.
Promise?
I promise.
Reason number 2, you're moving for a job or sanity. Your dream job just called, but it's across the state or even across the country. Are you really going to say,
nah, I'll stay here with my sweet 3% rate and a job I hate?
I hate my job.
new job, better pay, fresh start? Sometimes life moves faster than mortgage rates and you're missing opportunities to grow. Don't necessarily put your life on hold because of your interest rate. The new house is a few $100,000 a month. Is it worth stunting growth? Again, maybe, maybe not. But think about this. What if rates were to drop after you moved and you can refinance? Would you regret not taking that dream opportunity for you and your family? Of course, that's for you to decide. So let's move on to a reason that makes mathematical sense. Let's take the emotions out of it. Reason number 3, you're sitting on a gold mine. So you bought your new house 5 years ago, and now it's worth how much? Let's just say probably a lot more. If you can cash out, take your equity, and make a move that works better for you, high rate or not, it might actually be worth it. Or you sell it, offset the higher price with the equity you've built. If you live in a hot area, this just means that you likely have more appreciation and cash to work with. If you live in a slower market, it just means there might be more deals out there. Either way, the options are there, and this can be reason enough. You've probably heard that the post-pandemic housing market has turned many homeowners into accidental landlords. Some consider this a blessing, others maybe not so much. For the former, there's so much opportunity here. Bought your property at the perfect time and have reached a huge milestone for many on their financial journey, owning your very own investment property. Here's the scenario. I'd love to move, but I cannot give up my 3% rate. That's basically free money. Wait. What if I didn't give it up? What if someone else paid for it? Rents have been on a steady climb and have skyrocketed in some areas. If you've got a low mortgage payment because of your interest rate, that means higher cash flow. So instead of selling your old home, why not rent it out and let your tenants cover the mortgage? Here's an example. Let's say your mortgage payment is $2,000, but market rent is $2,800. That's $800 a month in extra cash flow. Suddenly, that higher rate on your new home doesn't sting as much, does it? And the best part? You're building wealth with 2 properties instead of 1, a potential for tax deductions, and you're now living in a place that fits your needs. If you haven't explored this option, I strongly encourage you to take a look at the local market rents in your area. It might surprise you. I'm not saying everyone should trade in their 3% rate just for fun. But life happens, and when it does, sometimes it's better to focus on the right home, not just the right rate. Plus, this might just be a temporary worst-case scenario on your next purchase. If rates come down, you can always refinance later. I know all of these decisions are personal, but I find that many people aren't aware of their options or feel trapped, and I want to give you hope and reassurance. So tell me, if you had to move, do you have a good reason? And might it make sense? If you have any additional strategies or want to strategize, reach out to me. Drop a comment below, and as always, hit that like button, subscribe so I can provide more education and tips for all things mortgage and real estate. Thank you so much for watching, and I'll catch you on the next video.